Data centers are exploding, AI workloads are doubling, and someone has to store all that data. Today, we're breaking down a company at the heart of this transformation, Western Digital, WDC. What's really happening behind the scenes? What projects are they building? And is this stock heading toward $200 or down to $100? Hi everyone, I'm Emily Carter, and this is your no-hype deep dive into the real story behind WDC. Western Digital is not just a hard drive company, it's a data infrastructure company powering cloud providers, AI compute centers, NAS systems, gaming, professional media workflows, basically anything that creates massive data. Here's the most important part. AI-driven workloads such as large language models, autonomous driving, and cloud analytics require enormous storage capacity. Every major research report agrees. Data creation will jump from 120 zettabytes to over 180 zettabytes in the next few years, and Western Digital is directly in that demand cycle. Let's talk numbers. FY 2025 revenue, $9.52 billion, up 51% year over year. Last quarter revenue, $2.61 billion, up nearly 30%. Non-GAAP EPS, $1.66. Analysts expect another 22% growth in early FY 26. Margins are improving, cash flow is stabilizing, and WDC is climbing out of its recession cycle. Now let's go deeper, because this is where the real story is. Western Digital recently launched 26 terabyte OptiNAND-powered NAS drives, along with 104 terabytes and 208 terabytes G-RAID systems for professional creators. Why does this matter? Because AI training data, 8K video, cloud storage, they're all starving for high-capacity drives. WDC is pushing the limits of storage density. The company expanded its Open Composable Compatibility Lab and built a brand new System Integration Test Lab designed for AI and cloud workloads. These labs help cloud providers integrate WD hardware into complex AI systems faster, which opens the door to large-scale enterprise contracts. One of the biggest catalysts? Western Digital is splitting into two separate public companies: a pure-play HDD company and a pure-play flash/NAND company. This is a huge restructuring involving 18 countries, thousands of contracts, and regulatory processes. If executed well, this unlocks shareholder value, similar to what AMD experienced years ago. Here's why Wall Street is becoming bullish. AI data center demand accelerating. Flash and HDD margins improving. Corporate split unlocking hidden value. Analysts expecting margin expansion. Institutional ownership above 90%. This isn't hype. The numbers are confirming the trend. But you know me, I don't do one-sided videos. Here are the risks you must take seriously. Storage demand is cyclical. Competition from Micron, Samsung, Seagate. SSD price drops could pressure HDD margins. Project delays in the company split. Higher volatility due to sector rotation. WDC is a high-reward but high-risk play. All right, let's talk about where WDC could realistically go over the next 12 to 18 months. And I'm keeping it simple with 3 scenarios: a bull case, a base case, and a bear case. No drama, no hype, just what the numbers and trends suggest. In the best-case scenario, AI data centers keep expanding, storage demand stays hot, and Western Digital completes its corporate split smoothly. Margins improve, the market rewards the restructuring, and the stock could push into the $190 to $220 range. In the most likely scenario, things grow at a steady pace. AI workloads rise, cloud demand stays healthy, and WDC executes its roadmap without major surprises. In that environment, the stock naturally trends into the $145 to $170 zone. Nothing crazy, just solid, realistic growth. And for the downside, if global spending slows, if SSD pricing pressures margins, or if the company's restructuring gets messy, WDC could pull back. In a weaker macro environment, the stock may slide into the $95 to $120 range. If you believe in AI infrastructure, cloud expansion, and exploding data creation, Western Digital is positioned right in the center of the storm, but this stock requires patience and risk tolerance. It's not a safe bet, it's a strategic long-term bet. If you enjoyed this breakdown, don't forget to like and subscribe. It really helps the channel grow. And if you find these videos useful and want to support what I do, you're always welcome to join me on Patreon. With rising living costs, rent, bills, and 2 kids in school, your support truly helps me keep creating honest and valuable content. You can find me at patreon.com/US Stock Stories. And to everyone who supports this channel, may God bless you and grant you all the good things you hope for. Thank you so much, and I'll see you in the next video.